go. Let's
That's
go.
Scotty.
All right, man. Welcome to everybody to the MLO Live Show. Man, we had some good news yesterday. Fed cut rates, man. So everybody's like, dude, is it an amazing opportunity or what? You got, like, if I see one more post, like I'm safe from Fed's lowering rates and people thinking that rates like went down, stop posting that stuff. Use it. So that's what I want to talk about today. Does everybody know what I'm talking about? Or is everybody like, I mean, people were even messaging me this morning, like, man, like Fed cut the rates, like, oh my God, and rates went up. What is happening? For me, I think it's a better, like a huge opportunity for all of us to gain what? Gain market share, have conversations with our clients. I want to talk about that today. Yeah, it's all about conversations. Like if it stirs the pot and now you have something to talk about, is that good or bad, right?
Well, have you ever heard the quote, any publicity is good publicity?
Right? Any publicity is good publicity, especially good, the good, the bad, the ugly. You got the 6 Ds. You think the 6 Ds went away? Like, did Fed touch those? You think anybody cares about the rates right now when they want to or have to? How about investors? We talked about investors this week. Do investors care about rates? They love the fact that rates went up because why? More opportunity to buy homes.
Well, it scares people away. That drives the market down, and they can scoop up properties that they know eventually are going to go up in value. You know, it's funny you mentioned that. I was talking to one of our guys out in California, and he said the wealthy are scooping up properties like no other, and the average class, right, middle class, they're the ones that are holding off and falling behind. And the reason is because the people that understand the market understand that it's an appreciating asset, and what they're purchasing it for now, which is obviously under market, is going to appreciate over time, and they're going to see the benefits of that. So he said that is the market he's in. Now, of course, he's in a more affluent marketplace. You know, obviously there's different parts of California. It's not all one section, but that's what's happening in his neighborhood.
Yeah. And man, I'm talking to people that are having their best months ever. So I don't know that. I mean, and that's a blessing for the people. If you have a loan in the pipeline and rates went down, what does that do to you? You're fighting some battles you can't win right now with rates going down if they did go down. So like that's a savior for the loans that are in the pipeline. So you're welcome for that. And there's so many positives. Like you're welcome. You don't have to get that call today. Hey, I just got a call from that other guy that said he can beat it by 0.25%. It's like, nope, it went up 0.25%. Even if they're checking. So I just want to talk about that today. What are some ways that we can benefit from the rates going down? It's so funny that I'm saying that. The rates went down and we're going to benefit from it. But they didn't really go down. Dion, what do you think? I'm putting her on the spot. She's like, what? Wait, I'm an underwriter, man. I don't even know. Like, what?
Because listen, I don't know if you can hear me. My microphone is not facing the right direction.
We can hear you.
Somebody like me that doesn't deal with rates at all, I was completely confused. Rates went down, but I had 17,000 emails that said rates worsened. So I was, you just explained it to me because I was like, I don't understand. If the rates went down, why are all the lenders saying that it worsened?
Yeah. Yeah, why would you say that? Why would you put that out there? Like, she's like, shoot yourself in that. Like, come on, man. Like, use it. Like, hey, you say rates went down. Call me. Let's talk. Let's do a strike rate. Let's do a financial reset. Look at the, like, how can we help put you in a better Kobe situation? Right?
I locked in a refi yesterday after the rates went down and up.
Okay.
And it was because she had a bunch of credit card debt. And even though her rate's actually going to go up on her first mortgage, but her combined rate will be lower. And we're saving her $2,500 a month in, right?
Come on. Only 2,500?
2,500, yeah. Retired and on a fixed income. She was like in tears. She was so happy. So that 0.25% or whatever had happened to the rates yesterday, irrelevant.
It didn't matter, did it?
No, didn't matter at all. And then I had 3, to your point with investors, I have 2 investors buying a total of 3 properties and they're going to be signed around today. So they don't care. They're happy.
They know what's happening. They know what's going down. Like, it's about cash flow, and if the rates, when the rates come down, they will cash flow better. But they're going to take. They understand appreciation.
Yep.
Where the people on the fence are like, oh, I missed the window again. No, you didn't.
Yeah.
No, you didn't. Good job. So now everybody has a story to talk about today.
Mm-hmm.
And here's the question of the year. Here's the question of your mortgage career. If you talk about rates, what is your business about?
Transactions.
Rates. If your business is about financial wealth, appreciation, better financial situation, do rates really matter? Lewis, what do you think, man? He's like, what? Come on, Lewis, what are you doing? Tell us what you got, brother. Where are you at? You haven't said a word in like months. Come on, man. What's going on in Lewis's world?
Good morning. What is the question once again? I'm sorry.
I just want to know what you're doing, man. What's working for you?
Well, at this time I am just rebuilding. I was out for a while.
I know you were. I'm glad you're doing good, brother.
So my plan right now is tackling my past database, doing mortgage reviews, and also following up with clients that might have want to buy maybe 2 years ago, that were pretty much left on the fence because rates skyrocketed and now they're coming back down a little bit.
Yeah, buddy.
I'm reaching out to those people.
Yeah. Yep.
So that's my plan for the short term.
Good, man. Good. You'll do good. I'm glad you're somewhat healthy or recovering. So,
yes, sir.
Nice to see it, brother.
Hey, does anybody want a story that you can tell a client to help explain why when Feds cut rates go up on the mortgage side? Would that be helpful for anybody?
Let's do it.
Let's do it. Okay, cool. And by the way, full disclosure, this came from chat. So
It did what? Who's
so
that?
Here's your story.
Who that?
You're driving down a long highway. At the front of the road, there's a sign that says Federal Reserve speed limit. When the Fed cuts rates, it's lowering that speed limit, trying to slow things down a little and keep traffic from overheating. But here's the twist. You're not in the slow lane. You're in a mortgage lane, which follows a completely different route, one that winds through the bond market. Now, when the Fed says we're cutting rates, all the investors in the bond market start guessing what's coming next. Some think, wait, if the Fed is cutting, maybe inflation's not going away yet. Others think, or maybe the economy's still too hot. So instead of slowing down, they hit the gas and sell their bonds, which pushes bond yields up. And since mortgage rates are tied to those long-term bonds, your mortgage rate went up, even though the Fed's lowered theirs. So it's kind of like this. The Fed drives the short-term carpool lane, but mortgage rates follow the big trucks on the long-term highway. And those trucks don't always turn when the Fed does. So the simple takeaway is Fed controls short-term rates like credit cards and car loans. Mortgage rates follow long-term bonds, and those are driven by investors' emotions about inflation and the future. So when the Fed cuts rates, it doesn't mean your mortgage rate will drop. Sometimes it does. Exactly the opposite.
Cool.
Is that helpful?
Yeah.
Should I drop it in the chat?
Do it, man. Do the link. I mean, I guess the big thing here, Devin, man, is that I love is it gives us a reason to make a phone call, and have a conversation. And don't start with Feds dropped rates. That doesn't matter. They don't understand. Like you can say that story 1,000 times, and you have to relate it to. It relates to us, but what relates to a client? Let's talk about that. What can a client relate to? What is my monthly debt? What is my monthly net? Well, how much am I spending on my house per month? Taxes, insurance, MI. Can I remove MI? Do I have equity? What can I do? I literally am talking to a lady today on LinkedIn from a happy birthday post in the DM. She texted me. I don't know if it's real. I'll let you know, but she gave me her phone number. She says, I got 1.8 million in my house that's not being put to use. Do you have any ideas? 1.8 million in tax-free money that she can use to put herself in a better situation or just sit on it, whatever she wants to do. That was from a happy birthday DM in LinkedIn. I'll let you know tomorrow. So I'll call her today. That makes sense. So how much, I mean, Kim, how much equity did she have to save $2,500 a month? That's insane. Probably a ton.
Yeah, and it's not even a big, I mean, our average loan amount here is like 425. So, and it's not even that much. I mean, her house is probably worth 500 and she only owed 250, and
Wow.
I think we're, taking out 50 or
Okay.
70.
Okay.
Yeah, she had some big payments.
Was she worried about, she knew she was sitting on that equity. Was she worried about just putting more money back on the mortgage? Like what was her thought process?
She thought that she'd be able to pay it off.
Oh, she was trying to,
like people do when they bought
Okay.
it, but yeah. And so she just was kind of waiting, feeling like, oh, am I making a bad decision? Am I being irresponsible by, rolling this into the mortgage? And so I've been talking with her. She's a past client, and I've been talking with her for a year. I just kept updating her on the market, and she just needed to feel like she wasn't making a foolish decision. And when I showed her the numbers yesterday and said, look, because the credit card interest rates just kept going up, she's just getting more behind.
Yeah.
And so when I showed her yesterday, it only increases her mortgage payment like $400 or something. It's not a huge amount.
Crazy. Yeah.
Yeah. And so it saves her $2,500 a month. So when she saw that clearly, that was like, okay, ding, ding, ding.
Yeah.
And her mortgage rate is pretty low right now because, we did it back in COVID.
It's a mental.
And so she needed to see that it was, that her rate would be closer to that 5.5 range. She had that in her mind because she's down at the, in the 3s right now.
Yeah.
And so once we were, in that range, she felt more comfortable. Something in her mind was more comfortable. So
rates in the 3s, Kim, what were the rates on the credit cards that she had?
30s?
Yeah.
High
Crazy.
20s.
It's crazy. Yeah. It was, and I don't know exactly. I didn't have all of them. There was a lot.
I don't know if there is one less. I mean, I know they're in the 20s all day.
And I also was reading yesterday, something to remind consumers is, even though, yes, the Fed, that rate impacts credit card rates have not come down though. The credit card companies, what they're seeing is that they are not lowering their rates. So this isn't having that impact. And that's important to know.
Why would they, when the world owes more on credit cards than ever before in the history of credit cards? You know what I mean? Why? They don't even have to lower them.
Yep.
Yeah.
Another thing to talk about, I recorded a video yesterday to send out to my database, is that the workers right now who are not getting paid as a result of the government shutdown, a lot of those DoD employees, federal employees, are veterans, lots of them. And so a lot of those workers have VA loans, and they could do an IRRRL without having to income qualify. So we could help them out right now because we could do an IRRRL. So the ones that have been sitting on the fence, obviously it has to lower their rate or we can't do the IRRRL. But the ones who've been sitting on the fence, waiting for rates to get lower, now is a good time for them to make that decision, do the IRRRL, because they would skip a month's payment, maybe even 2. We could really help them out in the situation they're in, and they don't have to income qualify. So I'm putting that out, saying hey, if you know anyone in this situation.
Crazy. Wow. And that just sparks VA conversations. Because you get one, you get many,
Yeah, because that's not even about it. If the interest rate's up or down 0.25%.
Yeah,
they need some help right now.
Yeah.
Relief.
Good stuff.
Yeah.
Well, the reason I asked about the rates on the credit card too is one of the techniques we used to always use was to ask them for all their statements. And the reason that we could do that is because now we can go over those statements, be like, by the way, did you know that the rate on this card was 27%, 26%, 29%? And, that's compounding daily. And man, this is going to be amazing for you. right? So we use it as an opportunity to really show them the pain that they were already in, because a lot of times people don't realize that, so that we could help them show the relief, which is, hey, we're going to get this wrapped up. This is how we're going to put it together for you. This is how we're going to leverage your equity to put you in a better financial position and, help you, get out of this debt scenario that you're in. So, and then, again, and I'm sure you covered this as well, which is taking that savings and how they could pour that back into, the principal and potentially be debt free in such a short period of time. Because a lot of times when you take those high interest credit card debt payments and reapply it back to the mortgage, they could truly be debt free on everything in 8, 9, 10, 12 years. And it's amazing to see that. Now, most people won't, but to be able to show them how they can leverage that equity and make the same payments that they're already making right now to get debt free, it's pretty awesome.
And I just guess who knows the rates on the credit cards? So you just ask them, hey, what credit card do you have? I just Googled, because I have a Citi card. So I Googled what are the rates on a Citi card, and it shows 17.24 to 27.99 depending on credit worthiness. As your credit goes down, guess what? Rates go up. And you know how every credit card has a little monthly, oh, here's your credit score. Here's your credit score. They monitor that stuff. So just ask them, say, hey, curious, how much do you owe on a credit card? What kind of credit card do you have? Throw it in Chat GPT. Say, hey, what's the rate on this card, Capital One, Citi card, whatever it is. And it tells you. And now you have a conversation piece that is about rate, but it's about financial wellness. Not just financial reset, financial wellness. Like what can you, like, yes, you're like the mental effery that happened during COVID, putting people in the 2s and 3s is hurting people because they don't want to let it go because they know they can't get it back. But in return, it's costing them 30%, 20% on credit card at the end of the day, which it's such an easy conversation to have. Let them make the decision. But Kim, she would have done it if it was $1,500, probably $1,000. Like that's just stupid money, right? Hey, Greg Garrett, let's talk about it, baby.
Okay. So here's my 2 cents on the rate cut. The first thing I think people need to explain to people is, why did the Fed cut the rate by a quarter? I mean, does anybody know the answer to that? So
to give us something to talk about.
Yeah. So what really happens in banks is that short-term money markets and liquidity on bank reserves are declining, which is an indication that customers are in trouble. And they recognize that. So number one, that's the reasoning behind the rate cut. Now, number two,
can you say that again? Because I think that's important. I think that needs to sink in. That was really important. Say that again, because liquidity of the people.
The liquidity of the people is dropping, and they recognize it because short-term money markets and the bank reserves, actually what they see in bank reserves are I guess what I would call it, are under strain. And so they've got to do something to help the banks. And that's the reason for the quarter. That's just my personal opinion. Now,
so how does that help the banks, lowering the rate? Because that doesn't help the consumer.
Because the banks get to borrow money from the Federal Reserve. Okay,
so there's borrowing at less money, which is giving them more money on the credit card stuff. All right,
that's exactly right. So my takeaway and I'll tell you my takeaway, and then I'll tell you what I don't understand. So when I was listening to Powell yesterday, he said something twice, and if you ever say something twice, it really resonates with me. So in his speech, he says, we are going to freeze the balance sheet. And then after December 1st, we're going to take all of the reserves from freezing the balance sheet. We're going to invest them in the U.S. Treasuries. So what does that mean to me? And he said it in his speech, and then he answered a question that was posed to him in the same deal. What that tells me is that if they're going to start buying U.S. Treasuries at the 1st of December with the excess funds from the balance sheet, what do they want the T-bills to look like the 1st of December? Would they rather them be high, or would they rather them be low?
No.
Really? Think about it. If they're buying treasuries, you can make the argument both ways. You can make the argument that they want them high so that they can take some profit once they lower rates to put into the budget, or they can be lower, which helps the banks and the consumer. So you make the argument, but that's the part I'm not sure I understand. But he said it twice, which
He's thinking about
makes me believe they're planning on something the first part of December to either increase rates with treasuries or lower rates. And so my discussion with my consumer will be, our concern is that the Fed could start, when they buy treasuries, it could bump the price of treasuries up, which artificially will bump your rate up. So it's a great time to lock in November. So that would probably be my 2 cents to my customer right now. I don't know if that makes any sense to anybody.
Well, I just don't know. You know way more about it because that's you work in that field. So how can maybe can you say it in a way that would because saying that to as a consumer, how would you say it to a consumer that would help them? I mean, I know it's lock in now because you feel that rates might go up. But how can I understand that as a consumer to
I think the way I would explain it is
you're just trying to get me to buy a home, right?
Yeah, I would get you to buy a home, and we are going to be in a declining rate environment. Their next meeting's in December, and they'll reduce by a quarter again. There's no doubt in my mind. There were only two. Out of all the people on the committee, there was only two. One of them said, I want 0 rate reduction. One of them said, I want 50 basis points. So it was all equal for a quarter. So it'll be all equal for a quarter next in December, in my opinion. I think the Fed, what they're doing, if they really do see liquidities in banks being strained, then they should take a more aggressive approach, in my personal opinion, and lower rates more quickly than what they're doing.
So they're behind. You think they're behind? Then they're trying to catch up, and they're going to be.
I think they're behind, and I don't know if they care if they catch up, but I think they need to. So I just think we're not going to see a big reduction one way or the other in treasuries, and for a while. Is my 2 cents. I think we're kind of at the point to where it's going to be a next year kind of wait and see type deal. But and I hate to tell somebody that from a refinance standpoint, but but that's the reasoning behind, in my opinion, from a ex-banker position. That's why they should lower rates when they start seeing the strain of liquidity on banks. The question is what they do with their excess funds when they come off balance sheet could either help or hurt the consumer. And obviously they want to help the consumer, but they also want to put themselves in the best possible situation. Anyway, I didn't mean to confuse you.
No, you didn't. No, I love the conversation. Yeah. So we're not going to see any breathing room anytime soon. Well, I mean, we will. I mean, 6 months is not that far away, but I mean, like, so, and we might.
Interesting that we see rates start coming down before the meeting, which means it's baked into it, right?
Correct. Which is what happened. Which is what just happened.
So you'll see that happen probably the first part of December, unless they artificially keep treasuries up to purchase them. So that's my 2 cents.
Got it. Cool. Interesting.
Okay.
Thank you, sir. Appreciate you, brother.
I love looking at that kind of stuff.
I can tell. Well, that is your spot, man. We're gonna Greg's corner. Greg's corner, man. Like, so anytime you want to talk about that, we're all ears, because that gives us more conversations, So
okay.
Hey, Martine's asking where he can find that information, Greg, if he wanted to follow the same thing you're following.
If you could go to the FDIC, they've got great. I don't know if this is built into the FDIC data, but there's several things that you can actually do to look at data. You remember that a bank's call report is available to you 30 days after the end of each quarter. So, like, if you want to pull up your personal bank's call report and review it, call me. I can go over it with you and tell you exactly what's happening within that bank, right? And so, you look at call reports. You look at, there are. I don't have the software, but there's places that have the software that tell you, which banks, how many banks are undercapitalized, and which ones have impairments and stuff like that. I don't have access to that data without looking at each call report separately. They have the data to sweep off 5,000 banks, right? So I don't have that, but
I just
you go
found
to FDIC. Let me look right quick. I think
I just found an interesting link there that has a bunch to do with daily treasury, par yield curve rates, daily treasury, all kinds of long term.
But go into the FDIC period gov and you can look at all kinds of stuff. And I get every day I get something from them. You know, I get data driven information. I look to see which banks are under MOUs, which is, you know, memorandums of understanding, which banks have enforcement actions. You know, I hate to say this. I like to look to see which banks, you know, which somebody, you know, got kicked out of banking for, you know, doing something really wrong. You know? So
that's all public.
I look at all that crap. Okay.
That's actually public.
Yeah. Absolutely.
Oh, wow. Okay. Yeah, that's cool. Yeah. So how to use, So what would you search for in Chat GPT? Cause it's all public, like to get some good intel would be the question.
What I've got right quick. Hang on a second.
It's good stuff.
I'll keep talking. I'll look.
All right. Yeah. Anybody else have any more success stories from this week and people that they've helped put in a better situation, closings, refinances, debt consolidations, investor purchase? No, it takes a second for everybody gets nervous.
Scott, I had a funny one the other day.
Yeah.
So I'm out. So one of my builders gave me 15 listings I had to put up. So it's on this street, and I was putting signs up. As I was putting my signs up, the other half of the street is one that I've already closed. And just by putting up my signs, you know, I see the neighbors and whatnot, and, you know, people going to work or whatnot. So by the time the day was over, I ended up with 4 refinances.
Just by talking to him.
I didn't do anything. I was just literally just putting up my signs.
Oh my God.
The whole idea of call your database is such a powerful tool.
Yeah. It's almost too easy. You know, everybody that does it has success. I got a text yesterday from Dan. I don't know if it was Dan, you here? And let's see what he said. He said, just picked up another deal. I'm not going to be in the, let's see, dialing for dollars now. I'm hopefully 4. Yeah. So he's just, when he makes the calls, he gets deals, you know?
Yeah.
So
I believe it.
So it's just having conversations. It's just opening it up to anything I can do to put you in a better situation, reminding them who you are, what you do for a living. Saying, I mean, it's a bit like, well, you can say Happy Halloween, man. I was thinking, you going trick or treating? Take it, you know, what are you doing? Hey, just wanted to see if there's anything I can do to put you in a better financial situation. That's it. 3-minute conversation.
Well, I think, Scotty, some people get petrified because they see that 3.25 rate. They're like, what am I going to do for this person? You know, they're at a 3.25, and I wouldn't do anything with the 3.25, but we got to remember we're not in their shoes. There are people out there that are struggling, and we don't know what their situation is until we call and ask them. And maybe it's not them that's struggling. Maybe it's a neighbor. Maybe it's a friend. Maybe it's a family member. Maybe it's a coworker, right? But this is how we put ourselves in a position where we have opportunities, because those are their downlines, right? So each one of those people have people that they influence. And if you just call and say thank you, and maybe share a story about how Kim helped somebody else, right?
Yeah.
If it wasn't you, you can share her story, you know?
Yeah.
Hey, right? Kim's part of our community. So that's the royal we. You can tell that story. You know, hey, if you were going to do something, what would it be?
And we're not talking about a couple $100. We're talking about thousands. I mean, Kim's going to make $4,000, and she's saving her so much money and putting her in a, like, you think if Kim was to just walk away and go, hey, congratulations, thank you, appreciate your business, like, and not do anything, or if Kim goes, hey, just next month and the month after, stay top of mind and like and comment and just checking in, you okay? Amazing, right? Hey, is there anybody else I can help do what I did for you? You think she's not going to yell it from the rooftop? Give her a megaphone. Send her send megaphones and go, hey, Kim helped me. Like,
Kim Mason is amazing.
You know, Here's
Aisle
another
4.
story.
Yeah.
Another story you guys can use. My other cash out refi this week is single mom owns her house free and clear, but she
Mm.
went back to school after ending up a single mom. She went back to school for a couple years and had to live on some credit cards. That was like 4 years ago. She's been back to work or at a great job the last 2 years, but the credit cards again, she can't quite get them down, and she put solar on her house, and so I ended up doing a cash out refi for her, and she had a HELOC, and just combining all of it, into one. And so that's another situation where it didn't really matter a 0.25% on the rate one way or the other. This is a big help to her.
Yeah. Crazy. Too easy. Yeah. Like debt free. She owed nothing. You think rate matters to her? But guys, there's so many stories like this, and it might not be in your database, but your database might know somebody in trouble. Because we talk, everybody talks, everybody shares conversations, get-togethers. Big get-together tomorrow coming up. How many people walk around the neighborhoods like, hey, Martine, it might behoove you to just sit around that neighborhood and just sit out and those houses are for sale to get more refis. I mean,
I want to drink my beer and have a candy
Okay.
and hand out candy.
Okay, all right, brother. I love you, man. I love you guys. So please do me a favor. Do this for them. Reach out to the people that know, like, and trust you, and help them. Help put them in a better spot.
Scott, in the past, I used to have food going to hand out to the parents. I would also give out alcohol.
Mm-hmm.
So when people would walk around, that's literally what I would do, because I would be camped out while my wife would take the
Great
kids
idea.
trick-or-treating.
It's a great idea. Good stuff. Yeah.
It ended up being a gathering spot.
Yeah.
That was years ago. My kids are a little bit older now.
Remember the bottle labels? Remember the water bottle labels? You remember those? Those are still a thing.
I just saw a sticker where you can actually order them and stickers and put them on any product, just to brand it.
Yeah. This is a great opportunity to do that. So good stuff, guys. All right. Have an amazing day. Appreciate you guys. Devin, what you got for us, man? Let's take us home, baby. Let's go.
Let's get stronger, man.
Let's get 40 deals today. 30. There's 40. There's almost 50 deals that people out. Let's get 50 deals
Call the
today.
databases.
Let's do it.